Welcome to everyone. In this week's video you will learn how powerful and profitable the cycles are. And you will also learn how to use them to trade the gold market to increase your profits. This week's video will cover the gold market for the week of July 22nd, 2024. Before we start, make sure you read carefully the disclaimer. The 10 days cycle. My last weekly update was on July 1st. The last 10 days cycle formed on July 15th. I draw a 10-day cycle trend line, what's Hurst call a VTL, from the July 9th and July 15th lows. On Friday, July 19th, the gold ETF crossed below it, confirming the 229.65 high on July 17th is at least the 10-day cycle peak. The cycle trend line is very helpful to identify the cycle peaks. According to the Hurst principles, when the market crossed below a cycle trend line, this confirmed the peak of the next longer cycle. In this case we are dealing with the 10 days cycle. Then the crossing will confirm the peak, is also the 20 days cycle peak. Using this information, we can anticipate the degree of the next correction. To have a better understanding of this rule, I recommend to watch my series of video, Secrets Behind Cycles. I posted the link in the description below. The next 10-day cycle low is expected on July 23rd. On July 19th, the gold ETF crossed below his cycle line at 223. For a potential downside target at 217. This week the trend is down for Monday and Tuesday. Then after forming his low at the beginning of the week, the cycle trend will be up for the rest of the week. So far the success rate is 93%. The 20 days cycle. The 20-day cycle formed a peak on July 17th at 229, and he is on his way to his 20 days low. This low is expected on July 27th. Technically at that stage of the cycle, the gold ETF is supposed to cross below his cycle line, providing a potential downside target. Here the cycle line for this week and the potential target if the gold ETF cross below it this week. But despite the last Friday's sharp decline, is possible the gold market find only support on his cycle line. From the June 26th, 20-day cycle low, to the July 10th, I draw the 20-day cycle trend line. When the gold market will cross below it, this will confirm the 40-day cycle peak formed on July 17th. This week the cycle trend is down. Since the beginning of the year, the success rate is 75%. Meaning, if trading all the 20-day cycle signals, the gold ETF meet his target 75% of the time. The 40 days cycle. The July 17th is certainly the 40 days cycle peak. The gold ETF is on his way to form his low on July 30th. At that time the gold market should find support on his cycle line. Here the cycle lines for this week and their potential targets, in case the gold turn bearish on the short-term basis. The last 40 days cycle low occur on June 26th. The last two trading signal was, for the first one on June 3rd, when the gold ETF crossed below his cycle line at 217 and 216, providing a downside target zone between 208.90 and 207.84. With a low at 211.60 on June 26th, the gold market missed his target, which is a bullish sign. The second signal was on the upside, on July 2nd when the gold ETF crossed above his cycle line at 215. For a potential upside target at 218. This target had been met very quickly the next day, another confirmation of a bullish trend. This week the cycle trend is down. The success rate is for now 66%. Let's see the 80 days cycle. Since the last 20 weeks cycle low occur on June 26th and the Hurst principle of synchronicity, the 80-day cycle formed a low at the same time than the last 20 weeks. Like all the other cycles on the lower time frame. The next 80 days cycle is expected to form on September 2nd. On July 5th, the gold ETF cross above his cycle line at 218 for a potential upside target at 223. Which was met on July 11th. The next 80 days low is expected on September 3rd. The cycle trend is still up for this week, and the success rate is 50%. Let's see the roadmap for the next 80 days cycle. Just as reminder, the cycle line used on the roadmap is the 20-day cycle line. Since the last 80 days cycle was on June 26, we are right there. After forming his last 80 days cycle low on June 26, the gold market crossed above his cycle line. On his way to form the first 20 days cycle peak at 221 on July 5. Then forming the 20 days cycle low on July 9 at 217. At the time of the 20 days low, the gold market should find support on his cycle line. The low was formed well above the cycle line, confirming the bullishness of the gold market. Then the gold ETF rally and form his 40 days cycle peak on the July 17 at 229. The peak formed slightly on the right part of the 40 days cycle. Then after his 40 days peak, the gold ETF should cross below his cycle line. Providing a downside target for the 40 days cycle, this low should be on July 30. After forming his 40 days low, the market will cross back above his cycle line, providing an upside target for the 80 days cycle peak. Then, after the 80 days cycle peak formation, the gold ETF should cross back below his cycle line, providing a downside target for the next 80 days cycle low, forming a first low around third week of August. Then rally toward his cycle line, using it as resistance, before heading down to September 3 to form the 80 days cycle low. The 20-week cycle. At the time of my last update, I was expected the 20-week cycle forming a low in mid-July. But apparently, the gold market formed his 20-week cycle on June 26, about 2 weeks early. On June 26, the gold market made a low at $2,304 and the GLD ETF at $212, terminating a possible triangle pattern. Very bullish sign. In bull markets, the cycles have tendency to run little bit shorter than the Hurst nominal model, which in the traditional technical analysis is a very bullish pattern. Usually at the end of a triangle formation, an important cycle low occur, in this case certainly the 20 weeks. I also mentioned, unless we have a very sharp decline in the gold market, there is a very high probability the gold market won't reach his target by mid-July. With the $212 low, the gold market missed his $205 target by $7, as expected. Usually when the market misses his downside target, is bullish, and when he misses his upside target, is a bearish sign. On the week of July 1, the GLD ETF crossed above his 20-week cycle line at 217, giving a potential upside target at $222. $5 or 2.3% of potential profit. On July 11 with a high 224, the gold ETF meet and exceed his 222 target. The crossing above his cycle line confirmed the June 26 is at least a 20-week cycle low. When this happens, we can expect a very good rally. To have more details about this, I post the link in the description below, about my series of videos, Secrets Behind the Cycles. In this series of videos, you will learn all what you need to trade successfully any markets. Since, on June 26 we start a new 20-week cycle. This week, the 20-week cycle trend is up. We can expect the peak formation for this 20 weeks occur around the last week of August or the first week of September. The low is expected around the first week of November, the yellow zone on the chart. The success rate is 80%. In conclusion, despite the sharp decline on Friday, July 19, the gold market is still in bull market. Is on his way to form his 40 days low, then should resume his uptrend to form his 80 days cycle peak. If you like this video, please click on the like button and subscribe, to make sure you don't miss any future important videos. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update.